Hello, Lars Teeney here. I just wanted to add a forward to this podcast before you actually give it a listen. When we set out to basically do this commentary on the state of economics and speculation and just the rampant disregard for the people of America that Wall Street seems to have, for the middle class in particular, we didn't set out to influence any election or to try to get you to vote one way or another. In fact, we probably don't have a big enough listenership to even really have an impact one way or the other. So what we really wanted to do was first get frustration off our chests and to generally rant. Yes, obviously that was one aim of this discussion here. But the main aim is just to remind everybody what's at stake in this next election coming up. And remember, we're just so totally deeply entrenched in this two-party system that we don't even realize that there is a plethora, a whole world of variation in terms of how democratic countries carry out their elections. In fact, many democracies have numerous viable parties, not just a two-party system. And, we bitch and moan and complain about how nothing ever changes, and yet we still play the two-party game, which is essentially designed to carry out the status quo. So nothing will ever change in this current system. Even if you have a candidate that is a self-professed, quote-unquote, democratic socialist. In actuality, Bernie Sanders is a New Deal liberal. So I don't really understand why he needed a brand change when he could have just explained what the New Deal was. Just remind everybody. I mean, everybody loves the New Deal and FDR, right? I mean, even Republicans. And then Hillary is just a corporatist, part of a political dynasty. I won't even get into the Republican side because that speaks for itself, that whole candidate cesspool there. At any rate, I think I've ranted enough, and I will leave you to listen to the podcast. Thanks again for listening. Lars Teeney presents a discussion about the economic climate, the perfect storm in America's near future. Hello, thanks for tuning in. My name is Lars Teeney. I'm an independent author and student of history. I am joined today with John Toler, a fellow student of history, in this discussion on the precarious condition of the economy and a perfect storm that is shaping up to torpedo the remaining American middle class. We are also going to discuss the potential implications of the looming crisis that is in store for whoever the next president of the United States of America is. So, John, the audience wants to hear a little bit about you.
Hi, my name is John Toler. I'm also a student of history, human behavior as well. Along with Lars Teeney, I'm also an avid science fiction fan and wargamer. I'm also a technology enthusiast. We have a mutual interest in the coming storm with the bursting of the sap bubble. This is one of our first scripts for podcast, and I'm glad you're listening.
Thank you for that, John. As you all know, our economic system tends to be a boom and bust cycle. It often repeats itself throughout the history of capitalism. So, John, can you give us some specifics on the nature of the economic bubbles? An example of the boom and bust cycles, if you could.
Yeah, sure, Lars. The nature of economic bubbles are given when the commodity has outpaced the value of the demand of that said economy. One of the most famous early documented economic bubbles was known as Tulip Mania, which was at its peak in what was called the United Provinces, now commonly known as the Netherlands or Holland. At the time, the tulip was the rage. It was at its highest price being somewhere between 3,000 to 4,000 guilders. To give you some sort of perspective, at the time, a craftsman would earn an average of about 300 guilders a year. The Dutch created a future market to deal with the demand of such a rare bulb. This market, of course, in Northern Europe, we saw a small window for the growth of the bulb itself of about a week. So the supply was very limited. This resulted in what was one of the earlier ideas of selling futures or stockpiling bulbs to artificially inflate the value. At its peak, so many people were dealing in tulips in the United Provinces that people were actually selling their life savings. They were trading off family land and just about anything else just to get a stock of these valuable bulbs that was created artificially, of course. In the end, though, some of the more prudent speculators, as they could be called, began selling off their stock, which caused a devalue in the price, which rapidly turned to more speculators selling off, causing prices to dive and then turn into a panic amongst all speculators who began selling even at an outrageous loss to their own self.
Fascinating stuff. To think what people would go through just to acquire plant matter. Now, the Dutch tulip crisis wasn't the first or the last economic bubble to take place in the Western capitalism, but it certainly set a benchmark rampant speculation. We in the West seem to have learned little from history's lessons, as the get-rich-quick mindset continues to fuel speculation. Except in the modern age, the subject of these bubbles has shifted from the tangible goods, although there is still plenty of that speculation occurring, to more lucrative and esoteric financial instruments and schemes. The focus of these symbolic commodities are the idea of debt and the perceived values of startups. The recent phenomena of investors pouring unlimited amounts of capital into these tech startups with no sustainable monetization plan and a 90% failure rate, manifesting itself potently in the late 1990s and early 2000s in what has been dubbed the dot-com bust. So, John, can you give us some historical background into this era?
All right, Lars, the dot-com boom itself can definitely define an era in itself. That was a time when tech companies were popping up overnight, fueled by startup money, promising stock options to their employees. During this time, of course, we had Pets.com, Lycos, Ask.com. Specifically, the one I'm going to focus on is Cosmo.com, because that was a prototype sharing company which offered delivery of anything was their motto in business plan, actually. It was available in 9 cities, and it was once considered to be a rival of UPS and FedEx. According to CNN Money, Cosmo in 1998 secured about $280 million from just investors alone. On top of that, they also had got $60 million from Amazon.com and $150 million in promotional deals from Starbucks. So, I mean, they were taken very seriously at the time. But by 1999, just a year later, the company had a revenue of $3.5 million, but a resulting net loss of $26.3 million. As, of course, critics of startups such as Cosmo.com, Lycos, and the like would say, the business services they provided were not sustainable because their business models were poor. But at the end of the day, these .com companies collapsed because their business models were not actually set up properly to actually predict a long-term growth. They were almost a fly-by-night type of venture. The one thing that these prototype sharing economy businesses did have in the dot-com era that we don't see now, of course, is the safety net. Everyone who worked there was actually an employee. So once these companies did go under, they were able to actually lay their employees off, who, of course, were given the safety net of unemployment. This, of course, is not something that we can rely on now with the modern sharing economy, which is built upon legions of independent contractors, as Lars will probably more than happy to tell you about here.
If you ask me, that sounds like Grievous Waste. Thanks, John. Now, with companies like Cosmo.com and Webvan rising and falling, they inadvertently laid the architecture for what is nicknamed the sharing economy. Many, from Bill Maher to New York Magazine, have blasted the sharing economy. New York Magazine, in an article by Kevin Roos, stated, quote, "What's getting them to the threshold in the first place is a damaged economy and harmful public policy that has forced millions of people to look to odd jobs for sustenance." End quote. John mentioned legions of independent contractors who barely make over minimum wage, are on the hook for any benefits, and supply their own means to get the job done, whether it be bike, car, or cleaning supplies. With the loss of solid middle-class jobs due to globalization, our politicians are often quick to tout these vaunted sharing economy jobs as a viable alternative. All of this, of course, is occurring on the rocky foundation of the boom and bust cycle economy. That has has already produced the first dot-com bust. TechCrunch said in a recent article from October 2015, the companies themselves are burning through cash like there is no tomorrow. Throwing money at marketing, overhead, and, in particular, remuneration has become the accepted investment strategy for startup growth. All this does is perpetuate the vicious cycle of raising more money and spending more money. For the amounts that some of these businesses have raised, the jury is still out on actual profitability. End quote. Now, this morass was bad enough, but that is not the whole story. When I told you that this weather system can intensify into the perfect storm, well, the obvious elephant in the room, of course, is the 2007/2008 financial crisis, which in part helped create the vaunted sharing economy. This will help intensify the effect. John, can you give some background into this latest phenomenon?
Good point, Lars. One can say that the effects of the 2008 financial crisis are still being felt today. The collapse was a result of global sprawling banks as a result of loopholes which were exploited thanks to the Graham-Leach-Billy Act, signed under President Clinton, which partly repealed the Glass-Steagall. And it was the results of the Dodd-Frank Wall Street Reform Act, implemented in 2008, was an effort to reinstate the sections 20 and 32 of the Glass-Steagall, which were repealed back in the 90s. This is still an ongoing debate. So regardless, in 2008, the world economy faced a crisis on par with that of the Wall Street crash of the 1930s, because the housing bubble was bursting in the United States, which spread throughout the U.S. and the global financial markets. We saw a huge collapse with banks such as Wells Fargo, Bank of America. Then, of course, the U.S. auto industry found itself teetering on the edge of an abyss. Mortgage lenders who sold to these banks, and also government-chartered institutions such as Fannie Mae and Freddie Mac, which were created to buy up mortgages, also went under. There's also the insurance industry, which got into the speculation game with credit default swaps. At the beginning of 2008, $62 trillion in credit was insured by these derivatives. This was fine as long as the housing market prices kept going up. But that was just within the bubble, which of course eventually burst by mid-2008. And what just seemed like a slump in 2006 turned into a free fall by September of 2008. As a result, we saw that 7% of homeowners were now a month or more behind in mortgage payments, and there was an increase of 76% in foreclosures by the end of the year.
Yeah, I can pretty much assure you that I'm feeling the effects of 2008 financial crisis. Thank you for that, John. The last element to kick this tropical storm into a full-blown hurricane will be the next debt-fueled bubble poised to burst. I put it to you that this element will be the student loan debt crisis. Millions of students across the country, including myself, hold a significant level of crippling debt for the simple act of just trying to finance the pursuit of a marketable degree. According to Forbes magazine, quote, the outstanding student loan balance is $1.8 trillion, and a whopping 11.5% of it is 90-plus days delinquent or in default, end quote. Now, as you may or may not know, debt is largely dischargeable in Chapter 11 bankruptcy. However, in most cases, student loan debt is not, which exacerbates the plight of those in debt and cements otherwise highly qualified people into poverty and the non-jobs of the sharing economy. If the trigger of the 2008 financial crisis was predatory lending to consumers who could not afford mortgages, wreaked so much havoc on our economy back then, imagine what impact predatory lending to student loans for college will have on our economy during the next bubble bursting. What do you think, John?
I do agree with you, Lars, but hopefully we can be a little bit more optimistic, despite the fact that the collective outstanding student loan debt is currently standing at $1.8 trillion and growing. According to Bloomberg News, more than 90% of loans were government-backed. The speculative bubble, which is a result of predatory lending practices, which has become the new norm, apparently, has has grown despite our government's best intentions. Educational institutions, public and private, have taken advantage of this lending rate to raise their tuition rates. And according to U.S. News, quote, over a 10-year period starting from 2003 through 2013, the average rate of college tuition has grown by 80%, end quote. If history is any measure to look at for a pattern of repetition, then surely it's a matter of when for this bubble bursting with the rise of education. As we can see now, definitely the value of education has been outstripped by the demand for sure, and has left people hanging with degrees and questioning the overall value of the investment.
Those are some staggering statistics you have there, John. Let's hope that this upcoming election, we can sort of change this outlook here. And so there you have it, folks. We painted a rosy picture of the near future for you. And just to be clear, we aren't trying to fearmonger here, but it does no one a favor or a service to keep churning out optimistic caricatures of the financial future because politicians want to keep America open for business, as those little bags used to say directly after 9/11. Now, we'll be the first to tell you that we are largely armchair economists and students of history, so let us know if you want to argue our assessment or you would like to offer rebuttals in the comments section. We definitely welcome the input. If you enjoyed the content of this podcast, please drop us a like and subscribe to this channel. I'd like to thank John Toler, who will probably be starting his own channel for political and other topics, discussions. So please be sure to check him out when he gets online. John, is there anything you'd like to say in closing remarks?
It's been a pleasure. Thank you so much for sticking with us through this small rant about what we think of the current state of economics and speculations for the future here. As Lars said, yeah, you're more than welcome to leave a comment here. Stay tuned for many more ranting sessions here on our end. Thanks.
Thank you. Bye.